everyone is in quarantine stage and staying healthy and thriving in this pandemic. We're hopefully going to go through today until 8 o'clock. We cut down 1 hour. So we have a lot of information to go through with you, and hopefully our CPA who has a flight to catch will go ahead and depart exactly at 8. Good evening, everyone. So Abdulwali, you're controlling my PowerPoint, so go ahead. For those of you who are really new to Voice of Tomorrow, we are a nonprofit organization who's rooted in providing a adult education training that's rooted in fundamentals of understanding the business practices in the early learning world. We have done quite an extensive training to go through in the past. And this, we have the privilege of supporting the FFN center-based and licensed family child care providers in implementing the CCSG grant. This program is tailored to family child care home as well as center-based. If you are an FFN provider, many of these materials will not be relevant to you, but you are more than welcome to stay and learn. It's always good to learn. But as we shared, if you came to our previous training sessions, we do have 5 series sessions. Because of the holidays next week, we combined 2 of our sessions today. So we will go over allocations and funding today, as well as budget and accounting. We will have last week we had Childcare Stabilization Grant, what you could use the funds for. We went over extensively 3-hour training on how to use the funds. Now it's more about the finance practices after you have used up the funds. We will bring that what you can use the funds for again next week, so that you will have 1 session. If you have not joined the first session, it will be available for you next week. As always, there's going to be a Q&A session that is at the end. We will try to stay as much as time allowed, take as much questions as possible. If there are any questions that's pending past 8 o'clock, we will stay behind to answer those questions. And if we don't have the answers to those questions, we'll probably take those questions down and have DCYF answer that for you. So go to the next stage. Welcome, everyone. For those who just joined, welcome. Today's objective is really overview of the grant finance literacy training, overview of the intent of the CCSG grant. We will do a quick debrief on some of your understanding of how you thought the money will be spent and based on last week's training. We will go through business practices of financial and budgeting and expenditure reports. We'll talk about allocating funds between businesses and personal expenses. This is tailored more to family child care home providers. And we will have space, again, like I said, Q&A sessions. We hope to teach you as much as we can about the documentations that we have that you are able to use to support your spending. Just a quick reminder, in April, we will have a drop-in session that is just a space for you to drop in and ask whatever question you have. It's called the Money and Grant Talk. If you want to talk about the grant, we're here to talk about the grant. If you want to talk about any business expense related or budget, finance, and any money related conversation tailored to your business, we're here to help you and lend our expert knowledge. All right, so go ahead and go through. We're going to skip the polls today because we're really short on time. I'm going to give the mic back to our CPA, Abdulwali Mohammed, who will do the rest of the training. Thank you, everyone, and welcome once again.
Iftin, thank you so much. Good evening to all of you guys. Some of you, or probably majority of you, were part of our last session. So we thank you again for joining us. For those of you who were not present last time, my name is Abdulwali Mohammed. I am a local CPA practicing here in the Seattle, South King County area. My practice is mainly accounting, bookkeeping, payroll services, and taxes for individuals and small businesses. So if you want to get a hold of me outside of this lecture, My website is there. You can actually find my email and my phone number and the services I provide by visiting my website. So that brief introduction. So we're going to do a recap from our previous training. I think it's very important that we have a recap so that we can actually tie what we're going to discuss today to what we discussed last Wednesday. Okay, so last week and also this week, you are here to understand the CCSG grant. Your goal is to understand how to utilize the funds that you receive, the three type of funds: the workforce fund, the program add-on, and the add-on amounts. So we talked about that last week. So today we're not going to talk about those specific examples, even though we could probably going to touch a little bit. But today's objective is basically to understand how do you allocate those funds between business and personal, um, and also kind of tie that allocation to what's the common business practices, and also what does the IRS say about allocating funds between business and personal. Please keep in mind that DCYF can have their own rules and regulations regarding this grant, but also IRS also have their own rules and regulations when it comes to filing taxes, when it comes to allocating expenses between business and personal. So I just want you to realize that we're going to be talking about two different set of rules. One is for the grant, and also one is for the IRS and the common business practices. Don't confuse those two, even though both of them can actually conflict each other. Okay. So again, what's the CCSG? I'm not gonna go this into detail. It's a federal grant. It's being used to stabilize childcare providers, and so again, we are recommending, if you haven't read the grant agreement, to read it again. It will definitely give you a lot of information about the grant, what it can be used for, and the examples of the type of expenses. Remember, if you use the grant for expenses that are not allowed, you will most likely have to pay that back to the state of Washington in full. Okay, so please write down your questions, and at the end of the session, we will definitely answer all your questions. As Iftin said, if you don't have the time to answer them, we'll definitely get back to you via email. So again, what can the funds be used for? It must be spent on items which sustain the childcare business. Ask your question again. If you are if the daycare have purchased or incurred this cost if the business was not in the daycare business, obviously the answer would be no. So will you have purchased this expense if the daycare was a business? If it's yes, then the cost is allowable. If it's no, the cost is most likely not allowable. Okay, so today we're going to divide our presentation to understanding basic financial literacy, budgeting, and accounting. In these categories, we're going to be discussing the allocation piece, the budgeting piece, and the accounting system piece. Okay, in order to actually understand, you have to understand what's finance and what's accounting, right? Those are two different things. Finance is the process of providing funds for business activities and making purchases. In finance, there are two elements that we will all go over: budgeting and accounting make up the finance, right? Budgeting is a process of looking at a business estimated incomes, the money that comes in into the business from selling products or services. In your case, it's the money coming from providing childcare services. And expenditures, the money that goes out from paying expenses and bills over a specific period in the future. For example, rent, mortgage, utilities, food, diapers, and other supplies. Okay? Accounting is the system of recording and summarizing business and financial transactions, analyzing and verifying reporting. It's the past, or the budget is the future, right? Budget you're projecting is the future. You're saying, how much money am I going to get in the next 6 months or a year, right? How much will my expenses be in the next 6 months to a year? Some expenses are fixed, such as rent or mortgage or the salary of your employees. And some expenses are variable, which means they change or they fluctuate depending on the usage, right? Utilities, food, and supplies. Accounting is actually recording those. Accounting is recording what happened after you implemented the budget. It's the past tense recording, right? You're recording the expenses, you're recording the revenue. That's what actually accounting is. Okay, how this is important to you, right? As a small business owner, director, site supervisor, you are responsible for the basic finance structure of the business. It's critical that you understand the difference. It's critical that you understand the different categories of finance so that you are better aware in your activities, right? You probably hear this expression, the burden of proof is on you, right? In this case, from DCY point of view, the burden of proof is on you to prove that you've actually used the money you received for the allowable expenses. From the federal standpoint, the burden of proof is on you that you have actually deducted the necessary expenses on your tax return. It's always on you, right? On the other side, in the court of law, the burden of proof is on the government to prove that you're guilty, right? But from finance and accounting side, is actually you. You have to prove that you have actually used the funds for what was intended to be used. Okay. Agenda for today: learn the first step of finance, allocating and budgeting. Learn more, DCYF, CCSG spending and documentation. We talked about that in detail on our last session, but we're briefly going to touch again. What's allowable expense categories for the childcare grant? We're going to offer some sample of allowable purchases for each category. We're going to provide examples of different ways that you can document your expenses. We're going to please use this tool as a way to get ideas for how to spend down your grant amount. Keep in mind, some of the examples that we're going to use are just generic examples. You might have other ways of allocating your funds. Unfortunately, we cannot capture every possible scenario for the allocation. But if you do, you're more than welcome to submit your question and we'll definitely give you an answer. Okay. Let's think about this question first. What's your current financial practice right now? Ask yourself this question. What type of a system do you have in place, right? Are you someone who keeps everything in their head? You have excellent memory. You can memorize all the receipts, all the transactions, all the money you made, right? Or are you a shoebox person where you collect all your expenses in a shoebox, and depending on your mood or your time, you go to the computer and you have an Excel spreadsheet and you start keying in, $12.54 for, I don't know, Vaseline or something, right? Or $49.99 for diapers from Costco. Or you are actually an individual or a business who have a system in place where you have softwares like Xerox, FreshBooks or QuickBooks that someone or you keeps track of your expenses and your incoming revenue. Are we doing a poll for this just to kind of get an idea, Mohammed?
No, we wanted to open it, get few answers of how do people currently do their financial practice. So
excellent. So let's give it like 5 minutes and get an idea of how people have their financial practice.
So we would love to hear from you guys. So raise your hand if you would like to share how you currently do your financial practices, and we'll call on you.
Don't be afraid. It's okay. We're learning here together.
You can also unmute yourself and go ahead and talk. And it's okay if you don't have financial practices.
I use more.
All right, good. Now we're coming in. Thank you for everyone who raised their hand. Jasmine Valdez, go ahead.
I just keep basically like a ledger. It's not anything like on a computer, but it's like in my even personal life, I carry small notepads everywhere with me, so everything's basically on paper. Basically, is what it is. I keep some notes on my phone notes, but it's basically just like a notebook.
Nice, thank you for that. Jean,
Hi, can you hear me?
yes, we can hear you.
Actually, my husband uses QuickBooks, and so what I do is he gives me each month. I have to log my food and expenses and whatnot, and I add it all up for the month, and I hand it to him, and then he just pops it in for me. So, so I actually have a little secretary that helps me out there.
Wow.
You are very fortunate.
Yes, I am. He's got a head for finance, so that helps me a lot.
That is wonderful. Sama?
Hi, I'm Sama. I'm a shoebox person, so I put them in the shoebox. At the end of the month, I get a spreadsheet, and then I calculate, and I have a little thing, what do you call it, a USB thingy that I use to keep in track of monthly.
Wonderful. Thank you for that. Bella Ritchie, and then Susan.
Because I would care about everyone all the time, but I'm just.
I'm sorry, you guys. I'm a little bit sick, so I hope you guys could understand me. I document time I buy something. I have different categories of spending, and I document time I get home with the receipts, so it's current. And then I name my accounts, so they're all kept. Like for instance, when we had the PPP money, I named that account, so all the expenses came out of that account. I'm very structured. I write everything down detailed.
I love that. I love it. That makes me smile.
I've been like that my whole life. Yes. Thank you.
Thank you. Susan.
Yes, we use bill.com. So a lot of our bills come into us digitally. And then we also use QuickBooks. If anybody, we have credit cards for certain people on the staff. So if anybody uses their credit card, they send a digital receipt to our operations person. So we're trying as much as possible not to have the shoebox, but to have everything in Google Workspace in a file.
Nice. I see a lot of people saying shoebox and Excel.
Yeah.
You know, whatever method works to your madness, that's all that we need. QuickBooks, some of you guys said that on the chat box. Wow, wonderful practices. Thank you everyone for sharing. Abdul, we'll go ahead and continue. Those of you who have your hands up, please go put it down.
Yeah, I want to say thank you all for sharing. Those are all excellent. They're great. They're not bad. Even if you're a shoebox person, you're not bad. Okay, so continue that. If you're a shoebox person, try to elevate yourself. Try to graduate to the second level. You know, if you're a QuickBooks person, you're right there where you are. And I hope someday that you outgrow QuickBooks and you get a big accounting system, which means that your business is growing. So I'm glad that majority of you, or probably all of you, have some system in place. One thing I want to say is just think of before debit cards or debit cards were heavily used, or Zelles or Cash Apps. I used to carry my checkbook. You know, on the checkbook you have a ledger, right? And you go to Fred Meyer, you go to Safeway, and you write your check to Safeway, $88. You have the check number, right? And underneath the check, you have the carbon copy. Of course, I'm an accountant. What I used to go is I used to go to my check ledger, and I'll write down the check number, the date, and who it was for. And then the second level is where a description, the dollar amount. Then you have and then of course you have your ending balance from from your bank. You minus that. You're doing the exact same thing whether you're a shoebox person, whether you're doing a notepad or Excel or QuickBooks. So I applaud all of you for actually having a system in place. So now, again, we're just kind of giving you an overview summary of what we discussed last week. The goal is to have a transition. We want every presentation, every session to flow, so that there is no a disconnect between what we discussed last week and what we're discussing this week. Remember, the grant is made of the workforce amount, which can be used for employee raises, recruitment, retention activities. The program amount, which can be used for a lot of expenses, including payroll, utilities, rent, food, material supplies. An add-on is actually to add on to the program. Okay? We're not going to go into detail because we did it last week. Now, business versus personal expense. Of course, each one of us might have our own definition of what's personal and what's business. So I wanted to just reference, how does the Internal Revenue Service define business and personal? Okay, so there is a section or a code in the IRS that states there shall be allowed as a deduction all the ordinary and necessary expenses paid or incurred during the taxable year. The key word here is in carrying on any trade or business. I'm going to repeat again, okay? In carrying on any trade or business. In order for you to deduct your expenses on your tax return, it must relate to your business, okay? Having a massage therapist, maybe, or having a bachelor party at your pad will not be considered, carrying a trade or business. I'm just trying to highlight something here, okay? Then the opposite of that is section 262. If you noticed, one is 162 and one is 262, okay? The Internal Revenue Code says, no deduction shall be allowed for personal, living, or family expenses, okay? Personal, living, or family expenses. A good example, we're going to show you some examples later, right? For example, the childcare provider who is also living in that home. You can't say my entire mortgage, my entire food, my entire utilities, the Comcast, everything was in carrying any trade or business. Well, obviously, when there's no kids in the house, you're not carrying any trade or business. So you must find a way to allocate those expenses, okay? What's an allocation? Now that you know what's business and what's personal, you're probably thinking about, well, how can I separate them? Well, in order to separate them, you first must know how to allocate them, okay? What's an allocation? An allocation is the process of shifting overhead costs to a cost objectives using a rational basis of allotment. Allocations are mostly commonly used to assign costs to produce goods, which then appear in the financial statements of a business in either the cost of goods sold or inventory asset. I know that's a lot of jargon, but I'm going to break it down for you, okay? Basically here, what we're trying to say here is that if you have an expense, that can go both ways, personal and business, you must find a rational basis to allocate. Some folks will use a square footage if it's a rental. When it comes to food, sometimes it might be challenging, you shopping for the whole house, right? Your son or your daughter calls and says, oh, mom, can you also give me the New York steak from Costco? Well, obviously, the kids you take care of are not probably going to eat New York steak. So what you do here is you buy the whole food together. A best practice might be to separate them, but if you didn't, right? So you probably got food here, and you're going to say, I'm going to find a way to allocate this between dollar amount that I spend on the business and dollar amount I spend on my personal. Or it can be number of kids that you have if it's within two funds, okay? But we're going to go into detail later. Let's go to the second slide. Okay, allocating funds between business and personal expenses. I want to focus on the home-based child care provider. This example is for them. It's not for folks who have a center. Okay, we're going to talk about that later for the center. And this is actually copy from the Internal Revenue Code. A good source document for you to review if you are a home-based childcare provider is topic number 509, which is called business use of home. In order to deduct expenses for business use of the home, you must use part of your home as one of the following. Number 6 is what we are. We are a daycare facility. Whether if you are a if you are a home-based childcare provider. 1, the keywords here are exclusively and regularly. Okay, exclusively and regularly as your principal place of business for your trade or business. So 6 a.m. to 6 p.m. It's exclusive and regular, right? 24 hours, even better. Okay, number 2, exclusively and regularly as a place where you meet and deal with your patients, client, or customers in the normal course of your trade of business. Obviously, the parents and the children are coming to meet you at your house, right? 3, a separate structure that's not attached to your home, used exclusively and regularly in a connection with your trade or business. So this might be someone maybe who have another separate structure in their house, but also it can be also defined as a basement or the first floor or the main floor or third floor because you have designed that area to be primarily used for your business. Okay. Number 4, on a regular basis for storage of inventory or product samples used in your trade or business of selling products at retail or wholesale. In your case, as the home-based childcare provider, it might be the beds, the food, the diapers, the wipes, the supplies. That will be your storage of inventory of goods, okay? And for rental use or a daycare facility. I hope that makes sense. We can talk about that later if you have questions about this, but I wanted to capture this from the Internal Revenue Service point of view. And most likely, even though DCOF did not say that, they will probably use this method as an allocation of your personal versus business expenses. Now that we know, in order for you to deduct your business expenses, these are what you have to be, okay? There are 2 methods of allocating, deducting business expenses. There is the regular method or the simplified method. Now, what are these? We're going to discuss these 2, and we're going to also have some examples of these 2 methods. Okay? One is the regular method. What is the regular method? The regular method is a way to compute the business use of home deduction by dividing expense of operating the home between personal and business use. Remember, we're still talking about allocating of funds. We're just going into deeper of how to allocate funds. We're now in the simplified method and the regular method, okay? Deduct direct business expenses in full and might allocate the indirect total expenses of the home to the percentage of home floor space, square footage, used for business. A qualified daycare provider, that's you of course, who doesn't use his or home exclusively for business purpose, however, must figure percentage based on the amount of time the applicable portion of the home is used for business. So this is probably someone who is not exclusively doing a childcare provider, maybe, and it's not the friends and family, okay? Just someone who's doing it passively. It's you own a home and you probably take care of a neighbor's kids, or occasionally someone or a family or an event type of a thing, right? You have it, okay? We're gonna now discuss examples on the next slide. Okay. Sorry. Okay, we're still discussing the simplified method, okay? This method allows qualified taxpayers to use a prescribed rate of $5 per square foot of the portion of the home use business, but it cannot be more than 300 square footage. Ask yourself, if you're a home-based childcare provider, why will you use the simplified method if you're only limited to 300 square feet? That's basically the size of a living room, right? You're forgetting the bathroom, the kitchen and stuff. So we're saying that it is not a wise decision for a childcare provider who is going to file Schedule C with their individual tax return to use the simplified method, okay? It's only $5 per square for 300 square feet. So if you do the math here, you're basically gonna be what? If I do the math, I think it's $1,500 is what you're allowed to deduct. So that's like 1 month's mortgage. Okay, my next slide. Here are some examples of these expenses that you can deduct. Okay, we're gonna go them into detail. Rent, mortgage or lease payment, utility bills, heat, water, electrical, garbage service, etc. Business insurance, goods and services that are needed to run your business, such as payroll bookkeeping software, the automation of your business, materials for diapering and toileting, materials for safe sleep, materials for playing and learning. Remember what the Internal Revenue Code section 162A said. It must be in the course of carrying your business, and it must be ordinary and necessary, right? These are examples of carrying any trade or business. And you can deduct those, whether in full, if it's for 100%, or allocate them between personal and business. Now, we're going to provide examples of each expense that might be subject to both business and personal. We're going to allocate them. Okay, remember, we're using a simple basic math for the allocation. Your rent, your mortgage, or your lease can be more or less than what we are providing here. All right. Let me make this bigger. So allocating funds between business and personal expenses. Again, we're still talking about the home-based childcare provider. I'll talk about I'll talk about the center, briefly later. Okay. So here, let's make the assumption that you are renting a property or you own the property and is subject to mortgage. The rent or the mortgage is $3,000. Okay. Your home is located in King County. It's 5 bedrooms. It has 3 baths, and it is 2,600 square footage. Okay. Upstairs is 1,560 square footage, exclusively used for personal. That's where you, husband, wife, and the kids sleep, spend most of their time, even when the daycare is in operation. Okay. Downstairs, basement or the main floor is exclusively used for business during the day or 24 hours, and it's about 1,040 square feet. I use this percentage, 60-40 percentage. It can be 50-50. It can be the other way around. But I just wanted to kind of show you that sometimes you might be using most of the property for business. For personal or business. Okay. Now that you know the square footage of your property, your home, and you know the square footage that is allocated to personal and business, what percentage should you allocate to business and personal? Of course, 1,560 over 2,600 is 60%, and 1,040 square foot over 2,600 square foot is 40%. For those of you who are familiar with the form 8829, that's how you actually enter when someone is doing your taxes or you're doing your own taxes for the Schedule C under form 8829. Now that we know what to allocate between personal and business, you're going to say, my mortgage is $3,000. Of that $3,000, only 40% is business, which is $1,200. So under the Form 8829, when you're preparing taxes, again, remember, I'm talking about home-based childcare provider who is a sole proprietor. Okay, I want to make that distinction from the other business entities. So on that line, I believe it's line 8, you're going to take $1,200 times 12. That will be your business expenses. Okay. I also want to go back and say DCYF did not say you can allocate this way or that way for this specific grant. It said you can use it for rent or mortgage, but they didn't say allocate or don't allocate. However, as we mentioned last week, it's always better for you to practice common sense business practice, because if you're going to do 100% of the grant, well, and it's allowed, you have to allocate it at the federal level. Okay. Now, on the second box, can you use the same method for all other costs related to health, such as utilities, maintenance, and repairs? Of course you can, because utilities and maintenance are also being, like, for example, let's say I had a plumbing issue upstairs, right? And it cost me $1,500. Even though I'm fixing upstairs, but the plumbing impacts the whole house. Therefore, 40% of that cost is definitely gonna go and allocate to business. Let's flip that around, right? At the bottom, where I was using 40% of my business, I had a plumbing issue or I had a kitchen issue, right? And I called a handyman or a contractor and they fixed a specific daycare. Can I use this? Yes and no. Yes, meaning if you just don't want to change your method, you can do that. But if you can justify that a specific expense was actually for the daycare, it was not for, between personal business, then 100% of that repair and maintenance will actually be deducted on the daycare. So you don't have to allocate that. But it's using subjective judgment when you're trying to do that, okay? Again, this allocation example only applies to rent, mortgage, and utilities. And alike, you can also do that in real estate or mortgage interest, okay? And home insurance. So I will really encourage you, if this is really new to you, to really have a discussion with your tax preparer or CPA so that you fully understand what the Form 8829 actually is. Okay?
Abdulwali, while you change the line, I want to kind of reiterate. So this is best business practice, everyone. For the CCSG grant, you could use fully your mortgage and rent pay. We did clarify that with them, even though the past grants that they have only focused on the business allocation piece. For this CCSG grant, they are keeping it free reign, but always keep in mind the best business practice for all of the grants that come in. But there's an exception for this one.
Thank you, Iftin. And I thank you. I want to add one more thing before we open up questions. So, for example, if you're the shoebox person, if you're the notepad person, if you're the QuickBooks person, right? When you write that check for the business for proving to DCYF, then that check, you're going to send it to them for approve. But when you're going to go see your tax preparer to file your taxes, just remember that you have to use the allocation method in order to do your federal taxes, because the IRS under Section 262 will not allow you to deduct any personal, living, or family expenses. Now that we have clarified that between the two methods, any questions related to the allocating of funds between the two methods, please raise your hand and Iftin will call you.
Yay. Wow, no questions, anyone? Ah, there goes Bella. Go ahead, Bella.
I don't have a question, but I have a suggestion. If everybody, when they get that money, if they put it in a special account, and then what'll happen is if they go like to Wells Fargo or Bank of America or Chase Bank, once you write a check in your account, you can push on a button and it'll show you the check. And so when it comes time, if they ever audit you, all your checks are just, all you have to do is just pull the whole account and everything's there. It's all wrote down for you. You don't have to try to find nothing or look for anything. Long as you just make the purchases out of that one account, everything is done for you.
Oh, thank you, Bella.
That's an excellent suggestion, Bella.
Uh-huh.
What you're doing?
And I'm sorry, guys. I'm sick. I caught a cold or something. I apologize.
Hope you
for
feel
my
better.
voice.
Bella,
care.
I want to say, Bella, that's an excellent suggestion. What you're actually doing here is you're separating from your regular operating expenses and revenue from the daycare side from what actually relates to the CCSG grant. You open it a separate account, and if you ever get audited by DCYF, you're just going to provide them with the expenses that's coming from a specific account. That's an excellent suggestion. But keep in mind also the downside to that is that now you're keeping track of 2 or more than 2 accounts for your overall business. Iftin, who's next?
We don't. Anyone else with a question? Tammy Johnson asked, "Did I hear you say you can use 100% rent payment for this grant?" Yes, Tammy, you heard me right. You could use 100% of your rent, utility, mortgage, whatever expense you got going on. You could use it for this grant.
And Iftin, I want you to add, but when you're going to file your taxes, you must allocate your expenses because we don't want people just to be stuck on the first suggestion, right? We want to tell them because it's tax season right now. So they must also know that.
Yes. Also documentation.
All right.
Colleen, go ahead.
Yes, I had a question last week about paying off a vehicle that I purchased for the daycare, a 15-passenger van. And you guys were going to get back to me on that, but I haven't had an email or heard anything.
So we posed the question to DCYF, and we got a very vague answer today. As long as you could justify that expense as a program expense, then you will be fine. But again, it goes back to how much is it, and what is it a business expense? Can you justify it later? So we gotta call.
It's used to take the children to and from school on a regular basis. I only care for school-age children, so
Okay.
It's definitely a business expense. I would not be driving a 15-passenger van if I didn't have a daycare.
Then you should be fine.
Colleen, the
Okay,
key answer was that you will not be driving a 15-passenger van.
If it wasn't for the business.
If it wasn't for the business, right? Remember, it has to be an ordinary course of business. Because your purchase is bigger than operating expense. It's considered an asset. It's going to last more than a year. So that's why DCYF give us that vague answer.
Okay.
I think that's it for the questions. You can go ahead and go to the next one.
Okay, thank you. So now that you know what finance is, or have an idea of what finance and accounting is, and you have an idea of allocating funds between personal and business, well, then how do I budget? And when I budget, how do I account for these expenses? We're now going to be discussing budgeting and accounting. Okay, so overview of budgeting and accounting. Budgeting, I mean, we hear this, right? Do you have a family budget? You have to have a rainy day fund budget. You have to have a vacation budget. We have budgets. We have budgets for expensive shoes. We have budget for Louis Vuitton bag. We have budgets for a lot of things, right? But we're talking about budgets for your business right now. Budgeting aims to predict what will happen financially, future, looks forward in time. People ask these questions. What will my spending be 6 months from now? I want to save for a mortgage. I want to save for a down payment. How do I cut down costs? What's coming in? What's going out? A year from now, how much should I have savings? How much profit should my company or business have? That's what budget is. You're asking yourself these questions. Once you ask yourself these questions, then how do you budget, right? We're going to talk about that in the next slides. The second thing is accounting. What's accounting? I said it before, and I'm going to say it again. Accounting deals with financial transactions that have already happened. Think of a debit card. Once you swipe that debit card for food, for gas, it's past tense. The money have came out of the bank. Now, how do you record that? Someone said she has a category. She has a PPE, gas, repairs, auto maintenance. That's what accounting is talking about. It looks backward in time. What was my cost for rent, mortgage, utilities, and etc.? Okay? Let's talk about how do I budget? Okay? Well, to be very frank, only you know how to budget because you know yourself. You know your business. An expert might just give you an idea. An advisor might just give you an idea, but only you know how to budget for your personal and for your business. A budget is a financial plan for a defined period, often 1 year. You must have a period. What are you budgeting for? 6 months, a year, 2 year, 5 year plan. That's what a budget is. Creating a budget is not easy. To make a truly effective budget, you need to analyze your earning and spending patterns over time. You need to look back. Last year, how much did we spend on food? What was our operating expenses? How much did we pay on salary? Are we going to increase the wages of our employees? Are we going to add more benefits for employees? Let's review our lease agreement. Is there an escalation on our lease agreement? Is there a rate change every year? Those are the questions you need to know the answer to when you're actually creating a budget. When creating a budget, you must plan and also allow for the unexpected things. Yes, you have a home, a bike can burst, right? I remember someone talked about in the last session, they had to change their, I think it was their furnace, right? $3,000, $4,000. You have to also plan for unexpected things. There is no right way or best way of preparing a budget. One thing that experts agree is that there is no wrong way of preparing a budget, but not having a budget is really bad because you don't know where you're going and what you're going to save at the end. All right, here are some 6 simple steps to preparing a budget. You know this already, but we're going to tell you again, okay? Gather the data. What do you mean, gather the data? Go back to your bank statement, right? Go ahead and print the last 12 months. Take a needle, go through transaction by transaction. Sometimes you can actually eliminate some transactions, right? You have a subscription that is $9.99 and you're not even using it. Guess what? You're going to eliminate that. You're going to find it. You're going to go to the website and cancel the subscription. You have just saved yourself $120 a year for that $9.99. That saving can actually pay your Netflix subscription, right? That's what we mean. Gather your data, financial paperwork, invoices. You need to know what came in and what came out. That's the number one thing when trying to prepare a budget. Calculate your income, okay? I put it here, not the Zelle or Cash App transfers from friends and families. Sometimes you lend a friend $1,000 a year ago, right? And they're going to pay you back. And instead of giving you cash, they're zelling you the money, right? Well, that's an income that's coming to your bank statement, but don't count it as an income because it's not an income. It's someone who's paying you back for giving them a loan, right? Create a list of monthly expenses. divide your monthly expenses between fixed and variable. What's fixed? Normally, it's your rent, mortgage, or lease payment, and employee salaries or wages. So for those of you who pay employees by the hour and it's full time, it's fixed, right? Because it's 40 hours a week times 52 weeks, which includes the sick time and vacation, right? If it's a part time, depending on if it's a consistent part time, then it's 20 hours a week or less, right? But if you're not unsure about that, then that would be considered a variable cost. What is variable cost? Things that change, time to time. Food changes, right? The more kids you have, the more food you spend, the more supplies you spend. The less kids you have, the less food you spend, the less supplies you buy, right? Those are variable costs. Utilities, right? Water, heat, gas, right? Well, we're in winter right now. Obviously, your heat bill and your light bill is going to go up, right? But in the summertime, your gas bill might go down. But if you have an AC, it might still continue going up. So those is what we mean variable cost when creating your list of monthly expenses. Total your monthly income and expenses. Now that you have an idea, last year I made, for example, $140,000. Okay, my expenses was $60,000. Okay, so you made a net profit of $80,000. Then ask yourself, well, how can I go from 140 to maybe 160, right? Because you want to grow every year, right? And then how do I lower my expenses so that my bottom line gets fatter and fatter every year, right? Because the whole purpose of business is to always grow. You do not want to be in the same position as you were last year. You want to grow, right? And hopefully you're not going down. Okay. Once you know your monthly income and expenses, now make adjustments to expenses. Okay. Rule of thumb is to increase 5 to 10% for unexpected expenses. I always tell people, you rather underestimate your revenue than overestimate them. And you rather overestimate your expenses than underestimate them. Because you know why? But be realistic with yourself. So if you underestimate your revenue and you make more money, fantastic. That's good for you. If you overestimate your expenses, but at the end of the year, your expenses are 5 to 10% less, fantastic. That means you have dodged a bullet, nothing broke down, nothing unexpected came, right? So I'm more of a consultative side. I always like to overestimate my expenses and be realistic with my incoming revenue. Here's an example of a budget sheet that I got it from Google. You can see it here. This is for actually a monthly budget. Salary, that's someone. This was actually for a personal budget. I wish I would have got an example of a business budget, but you get the idea. The top portion is your income. On the bottom portion, it's your expenses. Here's your monthly budget. Here's your actual amount. Some systems, accounting systems or finance systems, can actually allow you to upload your budget, and then it will record your accounting, and then it will give you the difference, right? If you're underperforming, it'll be green. If you over your budget, it'll be red, right? If you're close to it, it might be yellow. So depending on the software tool you use. Now let's talk about accounting, right? But before we do that, you budgeted, you made a plan, you know how much money you plan to make, you know how much expenses you're going to expect in 2022. Now you uploaded that. If you had no system, you probably have it somewhere in a shoebox or in the cloud. Now you're going to say, well, I want to see what I'm making and what I'm spending. By the way, this handsome young man here is the father of accounting named Luca Piccoli. I hope I pronounced his name right. Remember, accounting deals with financial transactions that have already happened. It is to measure, process, communicate financial and non-financial data to a variety of users, such as DCYF, IRS, lenders, and potential investors. So DCYF when they ask you for a document, you have to go to your financial systems or your accounting records to provide and produce those informations, right? You are a center-based childcare. You have been leasing your property, and all of a sudden you want to buy your center, right? If you want to buy your center, if you don't have the cash, you want to go to the bank and get a loan. Well, the lender is going to ask you for your accounting financial statements, right? And if you want to open up and have potential investors, a smart investor is going to ask you, show me your books. How much money are you making and how are you spending? Because why will I invest in a dying business? I'd rather invest in a thriving business. Okay, so there are we're still in accounting. There are a variety of accounting reports. We'll talk about a couple of them briefly. We will focus on three main ones right now. They're the balance sheet, the income statement, and the cash flow statement. A balance sheet is a snapshot of a financial condition. What are you at today? How much cash do I have? How much assets do I owe? How much debt do I have? And if I pay all my debt, what's left for me? Known as equity. That's what it gives you. That's what that's what a balance sheet is. Income statement is basically what are you bringing in and what's going out and what's left for you, profit that you made. And a cash flow statement is basically showing cash in and cash out. Okay, the balance sheet, assets, things of value owned by the business. There was a young lady here that just purchased a vehicle now, a 15-passenger van. It'd be recorded here. It'd be recorded under automobile. And it'd be depreciated over 5 years or however the life of that is, right? If you own the building that you're in, you're going to record it under building. If you own equipments, depending on your financial policy, if it's over $5,000, you record as an asset. If it's under that, you're going to probably expense it out and it'll be on a different report. Liabilities, debt, the mortgage you owe, the salaries of your employees that you haven't paid yet, the IRS tax that you withheld from the employees, but you haven't submitted, distributed to the IRS yet. It's all in there. The credit cards that your employees are using that you haven't paid yet will all be recorded under the balance sheet. And owner's equity is the value of the assets that remain after all debts have been paid. So you had your cash, you had your assets, you had your debt. When you pay off all of them, if it's a plus, that means you have equity in the business. If it's a negative, then you have no equity. Your liabilities are more than your assets. Now, the income statement. Most of you are familiar with this because this is actually what you use when you're preparing your taxes at the end of the year. Revenues are earnings from the sales of goods or services to customers, the children, the tuition, the co-payments, and other source of revenues that you charge to your customers. You can have more than one kind of revenue. Okay, so for example, you can be selling diapers, right, to the customers. You could be selling nutritional food to the customers. Expenses, cost of operating the business. We talked about rent already. We talked about salary. We talked about utilities. So these are the expenses that will be recorded in the income statement. Okay. So here, I'm not sure what this is. Must have touched something. My apologies. So now we're going to be bringing together budget and accounting. We talked about the budgeting, how to set up a budget, and what accounting is, and the language of accounting. Okay. We're going to set up a financial system, whether it's a financial system that will give you a budget tool and an accounting tool. For those of you who do not know what's a financial system, is anything. When I say system, I don't mean a software system, even though that's the greatest thing you can do for your business. It's anything used to manage the income, expenses, and other financial activities of a business. Your shoebox is a financial system. Your notepad is a financial system. As long as you can translate those into numbers, the financial system, right? I mean, I don't encourage you in today's age to continue using a shoebox and a notepad if you can. A basic book or a journal to record income, expenses, and other financial activities of business is also a financial system. Some of you are already using QuickBooks, FreshBooks, Bill.com, and Soho Books, right? I mentioned here, your memory is not a good financial system unless you are someone who is gifted and remembers every single thing that happens in your life. Okay. Apologies. How do you manage your financial system? So for those of you, this slide is it's for all of you guys. You can do it yourself if you have a basic training of accounting, right? There is a young lady who her husband is a financial expert, so he helps her. That's an asset to have, right? Unless your business is accounting or bookkeeping, keeping financial records is probably not what you do best. If you do it, fantastic. You can hire a professional to manage it for you. Even QuickBooks, the company that sells QuickBooks actually have bookkeepers that can actually help you do bookkeeping on behalf of you. So you can actually hire them to do that. So define professional. In this day's age, a lot of folks are calling themselves a professional. So I encourage you, if you're going to hire a bookkeeper, make sure they're a certified bookkeeper, okay? A person whose job is to keep records of the financial affairs of business. Normally, they're a member of an association that they have taken the right classes. There are actually folks who have self-taught, and I respect them. But I just want to make sure that if you're going to hire somebody, that you hire a legitimate person, okay? An accountant. An accountant is someone who has an associate or a bachelor's degree in accounting, right? They also do bookkeeping, but they also do interpreting, classifying, analyzing, reporting, and summarizing the financial data for you. The difference between these two is that, for example, if you wanted a financial statement that you wanted to take it to the bank that's unaudited by a CPA, you can actually have an accountant prepare that for you. A tax preparer, it's someone who prepares taxes. They can also be a bookkeeper, they can be an accountant, a CPA, and sometimes your grandma is your tax preparer at your kitchen desk. I've seen that. A CPA, someone like me, a trusted financial advisor who has passed the rigorous CPA exam, meets work requirements, and takes accounting professional education courses to maintain the CPA certification. The difference between this person and this two is that this person has a license to practice in the state of Washington. And if they're unethical, they can be barred from the Board of Accountancy and they cannot practice as a CPA in the state of Washington. So I always tell people, invest in three people. That's your doctor, your CPA, and your lawyer. And you probably know why I say those things. If you're sick, you want to have the best doctor. If you're in trouble with the law, you want to have the best lawyer. If you are really in deep problem with the IRS or other things and stuff, and you're under audit, you want to have an expert on your side. So invest in these three professionals for your business. What are the dangers of not having financial system? I talked about it when I was defining the IRS Internal Revenue Code. The burden of supplying information is indeed on the taxpayer. Okay? The responsibility to prove entries, deductions, and statements made on your tax return or your financial statement is known as the burden of proof. So whatever you put on your taxes is what you're saying that, yes, I have indeed, under the penalty of perjury, have incurred these expenses. Generally, taxpayers meet their burden of proof by having the information and receipts for the expenses. You should keep adequate records to prove your expenses or have sufficient evidence that will support your own statement. For the purpose of DCYF, you must have these records for at least 5 years. For IRS purposes, it's 3 years generally. There are some exceptions where you have to maintain more than that. But that's for another discussion. All right. You generally must have documentary evidence, such as receipts, canceled checks, or bills to support your expenses. We talked about it last session. Sometimes we lose receipts, right? That's okay. But you lost receipt for everything, that's not okay. So for example, if I lost a check for the rent, and for some reason, the bank cannot produce that check, right? And the IRS or DCYF selected the month of January of 2022. For some reason, I can't find the 2022 check for January. I can use common sense and say, hey, I cannot find that check of January, but can I share with you my December 2021 check, my February 2022 check, and March? The amount is the same. I pay the same landlord or the same mortgage. Whoever's auditing you will probably say, yeah, they misplaced the invoice. They misplaced the check. I can go with this. That normally happens, but not all the time. Okay? Some people have a problem understanding what's an employee and what's a contractor. I have seen folks who have been under audit by L&I because they have classified someone as a 1099 when they should have actually, classified them as they have classified them as a contractor when they should have classified them as an employee. Okay, I want to say this. I'm going to say it twice so that you get it. The IRS and L&I have two different definitions of what an employee is. So depending on who you're under audit, they're going to use that definition. Okay? So that's why I'm saying state agencies such as L&I and IRS can classify employee and a contractor differently. It's your responsibility as a taxpayer or a business owner to understand and correctly apply the rules. If you do not know these rules, I ask you and I urge you to really go see someone who is familiar with the rules and regulations of both L&I and IRS. Normally, it's an accountant or a CPA or even a lawyer who practices in business. Okay? That's why if you're confused, seek professional guidance. You will definitely regret later if you don't. So let's talk about federal. So when it comes to federal, they focus on employment tax purposes. Okay? A business must examine the relationship between itself and the person that they're considering a worker or a contractor. This is a general rule, by the way, is that an individual is an independent contractor if the payer has the right to control or direct only the result of the work, not what will be done and how it will be done. Okay? Whether a worker is independent contractor or employee depends on the facts on its situation. Okay, we're going to talk about that in the second slide. Oops, I didn't put that in there. So let me spend some time here. What the IRS is saying is that if you directly control the result of the work, then that person is an employee. They're supposed to get a paycheck. You're supposed to have federal taxes, such as Social Security, Medicare, and federal withholding employee, unless they're exempt from that specific taxes. If you direct the result of the work, you're telling the assistant, hey, go take care of Andy or Patricia, right? Go feed them, go change their diaper, go read a book to them, go ahead and teach them the ABC. You are directing that person. You control them, you supervise them, you can fire them at will. They're an employee. A contractor, from the IRS point of view, okay, it is a plumber. You don't control their work. You had a pipe that broke, my pipe broke. They know how to fix it. You're not going to tell them, start from the left, start from the right, start from the bottom. They're the expert. They bring their own tools and you pay them. That's what a contractor is. L&I, when it comes to, it's different for them. Even, for example, if you have a contractor who is remodeling your home, that contractor is going to bring their own employee stuff. Sometimes you might need to get an L&I insurance to protect yourself. If anything happens at your house, okay? But they do similarly also follow the same rules. The reason why I brought L&I is if your employee got hurt at work and they're injured, they're probably going to go ahead and report to L&I, and they should. And if L&I calls and says, hey, can you please send us the paychecks of Abdul Wali Muhammad and their pay stubs with the hourly rate and stuff, and you don't have it, then you are really in a bind, or should I say in trouble, because now you have been paying somebody who is considered an employee as a contractor. The state will take care of that person, but they will go after you later. Remember, keeping track of the expenses is very important. I don't know why this thing is coming back. Yes, it's very important. If you are selected for receipt verification, you will need to send DCYF copies of all receipts and documentation on how you spent your grant award. If you don't send in receipts and the documentation that show the grant was used on allowable expenses, you might need to repay part or all of the grant award to the state of Washington. So think about it, allocating funds between personal and business when it comes to filing your taxes for the purpose of DCYF and this grant. You can pay your rent, utilities 100% from this grant. So I know I didn't stop and take questions. I just wanted to make sure that we cover all the slides. But right now, we're ready for your questions. Iftin.
Ooh, you had a lot of slides. All right, everyone. We did have quite some questions coming in the chat box, so we're going to take a minute to answer those before I call on you guys. Let's see. Deborah asked, since I'm a cook, grocery shopper, house cleaner, and daycare provider, how much do I legitimately pay myself?
How much are you worth, Debbie? What's Debbie? Was it Deb? I'm sorry, I mispronounced the name.
Yes, that was Deborah.
So she asked, how much can I pay myself, right?
Correct.
I always tell people, what's your value? Obviously, we're all valuable. We want to pay ourselves $1 million, right? But I tell folks, we live in King County, one of them, I think probably the top most 10 expensive counties in the country, and pay yourself what you think you're worth. Are you worth 5,000, 7,000, 10,000? You know what you're worth, and pay yourself that much. Iftin, I hope that's what DCF says.
Well, yeah. At the end of the day, you are responsible for your own paycheck, so you decide what is that number that you want to give yourself. Okay. And if you don't have no idea what that number is, then the best thing is go to Dr. Google and put your title and find the wage compensation in King County. Charlena asked, as an FFN provider, should I have a separate account for the grant money, or is it okay to use out of my personal account as long as I make sure that and I keep the receipts? I will chime on this one, Charlena. Yes, you can keep it in your personal bank. because FFNs are specialized folks, there's no requirement for a business account, but for center bases and FFN providers and all of the licensed FCC providers, you are required to have a licensed. So we're gonna go to the question in the folks who have their hands up. Colleen, do you have a question? Or was your hand just raised? Okay.
I already asked the question that I had. I don't know how my hand got raised. Sorry.
It's okay. Let's go for Summa. Go ahead, ask your question.
Yes, my question was, some of it, I think Abdul might have tried to answer. It's about the contractor. So if I hire a contractor and whatever work they're doing, it's taking over a week to finish and something happens to them in my property, am I responsible for that?
Excellent question. It really depends. That was a bad example of me to use, but normally if you're hiring somebody to do work at your site, they should have their own insurance as well, and you should also have your own insurance just in case. So maybe that's the primary insurance, and yours might be a secondary insurance. So it's more, so that contract we're talking about is someone doing work at your property, correct? Someone fixing a roof, someone fixing a flooring, is that correct?
Yes.
Yeah. So yeah, it's just
yeah.
more of an insurance issue type of a thing and a protection. And I think a good person to answer that would be your insurance agent.
Any contractor that's doing construction should be licensed and bonded. And you should have a copy of that license and bonded.
Yeah.
And if you are an FCC provider or a center-based provider, you should always have a commercial liability insurance covering you for any potential issue that rises.
My example was treating an individual who's supposed to be an employee as a contractor and pay them as a 1099 and avoid to pay payroll taxes. So that's what my example was about from the contractor point of view.
Yeah. Because we're really short on time, we want to try to get as much questions as possible. Debbie, go ahead and ask your question. Debbie? Okay. We'll come back to Debbie. I'm going to put your people's names.
I'm here.
Oh, there you are. Go ahead, Debbie.
All right. My question is the grant. They give you a certain amount of money, and then they want you to write, keep track of everything you spend it on. Are they also allowing us to take taxes out of that money and use that as part of the grant that came through? Because that amount, that money is going to create a bigger tax amount. And I talked to my accountant, and he said, or my tax guy, and he said to take out 30%, hold it aside for taxes. Now, are we going to be able to show DCYF that this is the money we had to use to pay those taxes on that amount of money?
So Abdi, I'm going to chime in this one. So if it depends when you're paying the taxes. Let's say you got your grant on December of 2021. You have until December 2022 to use up the money. So if you're paying taxes within that period of the year, then yes. But if you are holding that 30% to pay it for your taxes coming 2023, then no. Does that make sense, Debbie?
It does, because the money, I did get the money in December, and it's going to create, a larger income. So I'm going to have to declare that on my taxes. So I'll need the extra money to pay my taxes with off of that money.
So yes. So within that year, spend it on all expenses that you're incurring.
Right. I won't have a chance to do that because I got it at the end of December. So I'll have to pay the taxes on it first.
Yeah. Warinda, did I say it right? Warinda?
And Debbie, if you could put your hand down.
Yes, I'm here.
Okay, awesome. Go ahead, ask your question.
I put it in the chat though, but I can repeat it. It says that so I received the grant money in December 2021, and I just have a question. Is it possible to write myself a check dated like the 31st of December 2021 for the $9,000, the workforce amount, as my year-end bonus? Would it help with my deducting the tax? Would that help, or does it work that way if I write a check?
Do you have any other staff listed in your business?
No, only myself.
Okay. So if you
15.
have only yourself, then yes, you could write that beautiful $9,000 to yourself and go celebrate. Make sure you send us a piece of that pie. Let us celebrate with you.
Okay.
But if you, for those of you who have staff listed, then you have to equally spread that 9,000 among all the staff.
Yeah.
If you write
I want to
So
add.
on the check, can I write? Do I have to date it like December 31st, 2021, for the purpose of tax deductible thing? Like,
So Lorinda,
no.
yeah, I was gonna
Go
say.
ahead.
So Lorinda, writing the check on December 31st, 2020 doesn't matter because the check is gonna clear January 2022, and most individuals are considered cash basis. So for you it's, I mean, I don't know how that. I mean, you can. I wouldn't encourage you to write yourself a check now and put December 31st and use the money to deduct your business. I wouldn't encourage you to do that. So just FYI, because the check is going to clear on your bank after January 12th, right?
Yeah.
So it's considered expenses that was incurred in 2022.
Oh, okay.
Yes.
I see. So, but then I have a lot of tax to pay for the 2021,
Yes.
right?
Yes.
Okay. Okay. I have another question. So when, sometimes we buy things for the childcare from like OfferUp or Craigslist and we don't get the receipt, how do we keep track on those, or do we just let it go? Or how is it possible to write up what we spend and put it as an expense?
Go ahead and print that. Go ahead and print the ad on OfferUp or Craigslist or Facebook, and you know how much the amount was. And most likely, you had a conversation with the owner, which is the amount you agreed upon on. So print those, staple them together, and you probably paid them cash and put a note on that. So that's the challenging about when you go the alternative market of buying things. You have to keep a lot of records because you're not going to Target to buy things.
Okay, and how about what has already been purchased like a while ago? So I have to let go of those, do I?
Yeah.
Yeah.
The other practice I've seen for Craigslist is you create an invoice and sign off that invoice that you purchased it from Craigslist. The $20, it was $20, and then you just keep that as a receipt. But if it's the past, then it's the past. You can't claim it. Just let's move on forward.
Okay.
So let's go to Eunice.
Thank you.
You're welcome.
Hi, so I have just two questions. One, you guys mentioned that to send your receipts to the DCYS. How would we do that? Do we email them?
So Eunice, they will send you if you get selected. Not everyone's going to get a audit. They will select people. If you get selected, they will send you a nice letter as well as an email of all of the directions you need to follow, how you're going to submit all the documents. I believe because everyone is doing virtual, it will be a digital platform that they will use where you will upload everything. Mm-hmm. There is no clear line of what the expectation is. They haven't put the guidelines together yet because right now they're only focusing on distributing the money. Mm-hmm. And they haven't sat down to figure out what the audit process will look like. But one thing we know that they shared with us is that people will be selected. Not everyone will get audited, but if those who are selected, you will be asked to submit things, and they will send you a nice letter that's very detailed.
Okay, great. That's good to know.
Yes.
Sorry, go ahead.
Do you have another question, Eunice, before I go on, Jessica?
Sorry to take time. I had one more question. It's kind of odd, so let me try to word this correctly. So let's say I get the grant and I deposit it into my business checking account, and I use the grant money for what it's supposed to be used for, and my other business money for what it's supposed to be used for. How do they know which money was which?
They really don't. They rely on your honesty.
Okay. It was a weird question, but that makes sense.
Yeah. Jessica.
Hello.
Hello.
So my question, I know you guys already talked about doing sale transfers, but when you're sending a transaction, there's like the memo where you write what that money is being transferred for. So my coworker, sometimes she buys things out of her pocket, and then I just do a refund, and I transfer her the money through sale. Can we still do that and use it to record expenses?
Who are you paying? I'm sorry, I didn't miss that part. Who are you paying?
Because she bought some stuff out of her pocket, so I just like do a refund and said what she used that money for.
You're doing a reimbursement. That's fine.
Yeah.
I prefer check, but I think check is the old way. But that should work if you put on the memo line.
Yeah. Okay, so it's better to just use checks in those scenarios.
Yes.
Yeah.
Okay, perfect. And one more question.
So you guys before you ask your second question, if it's a staff, then it's best to reimburse them with their payroll checks. So is the person a staff?
Actually, she's both of us are the owners of a family home program.
Okay.
Sometimes she just forgets to use the card for our account, and she just uses her personal credit card. So I just do a sale transfer.
Yeah. So when the best practice for a business is always, if it's a incurred expense and you used your personal account, document the reimbursement process, what they are being reimbursed for, attach the receipt, and then try to use as much as you can the payroll to reimburse, and try to avoid Zelle as much as you can.
Okay, sounds good. And then the other question, when you guys were talking about L&I, so are we the owners considered like employees? Do we need to do something with L&I?
No, you're exempt unless you choose to be covered.
Okay. Thank you.
You're welcome. Who else? Michelle. I want to call you Michelle, but it's not spelled right. So correct me, please.
No, it's spelled right. It's pronounced Michelle. Thank you.
Okay, thank you.
Hi, my question is, I'm a FFM provider, and I received the grant already. But when I received the grant, the family I was working for no longer qualified, so she no longer gets assistance from DSHS. But I'm still with the union. I'm still with DSHS. But what I wanted to know is, since I don't have a family that's with DSHS right now, how would I apply the funds?
Did you already get paid?
Yes.
The grant came to you?
Yes.
Okay. So clarity, what are you trying to apply? You mean spend the money?
Yes.
Oh, okay. Pay yourself.
Okay.
Yeah, use it as a payroll. FFN, your money is not a lot. Pay yourself, and keep your paycheck, the payroll that you give yourself as a receipt.
Because I've been keeping receipts for things I have been purchasing. But how would I pay myself?
Just write yourself a check. Well, actually, FFNs, you are unique because you're not is considered a business.
Yes, ma'am.
The normal document process doesn't pertain to you guys. So just keep your receipts, keep your record, and then if you pay yourself, then that's amount that you can use. And if you ever get audited, then they will see your bank transactions, what you used your money for.
Okay. I thank you.
You're welcome, dear. Lori?
I was wondering, the receipts, like if I wanted to buy kids' birthday things that I take care of and Christmas gifts, in that sense, would that be okay? To keep the receipts for those things?
Are you a child
FFN?
Are you a childcare FFN center?
Yeah. I'm just I would just go to the person's home and take care of the kids.
You're a FFN?
Yes.
Okay. I guess so, yes, you can. You could use that as a receipt if you want to give kids gifts. If you don't want to deal with the hassle of the receipts, then they just pay yourself, and then whatever you give yourself, you give it to the kids. Let's see, who else is next? I want to say Karen.
Yes. I just want to clarify something. I received my money in December, so I need to claim that money as income on my 2021 taxes. Is that correct?
Yes, ma'am.
And because it's such a large amount, I wasn't able to make my quarterly payments for it. So I'll end up owing money. And so the money that I owe the IRS, I just want to clarify, I will be able to use the grant money to pay them.
Yes.
Pay IRS on my taxes because I'm going to owe money. But it's a lot of money to all of a sudden have this income.
Yes. Yes and no at the same time. Everyone, I think Abdiweli went back a few slides back. He talked about the expenses that you can claim. So if you incurred a lot of expenses in 2021 and didn't have much of an income coming in, you can go back and use that expenses so that your income and your expense kind of match up. Now, if you had a lot of income coming in, and in addition to that income, you have another income coming in, but your expense is very low, then yes, you will owe a lot of money. Does that make sense?
I pay quarterly taxes, and that grant money wasn't factored in, and so they're going to say, well, that's money you didn't pay taxes on. And I know in the past when I've underestimated my quarterly taxes, I get penalized.
Yeah. Are we talking about the 990? Was it 941?
No. Let me help. Karen Burns, right? Karen? So
yes.
I'm glad you're doing quarterly estimates, and I'm glad you're paying your estimated tax April, July, October, and January. Yes, this money was not factored in December for you. Yes, you're going to get a penalty. So as Iftin said, when you do your taxes in April, you're going to have there's be an amount due. You can use that amount due. You can use that money to pay it out of the grant. In addition to that, you're going to have an underestimated penalty from the IRS. You can also use that money to pay from that grant, because the grant is what cost you to underestimate and to also underpay. And the grant allows you to use it for any expenses incurred in 2022 that is in the ordinary course of business. I hope that clarifies.
Yes, it does. Thank you.
Okay. Iftin, I know you were going this way, but I knew where Karen was going when she used the keyword estimated tax payments.
Yeah, so there, I think Carol on the chat box was asking the same question. Can I claim expenses from January through December of 2021? Yes, you can, but regardless, this is an income coming to you, and you do need to. You will be asked to pay taxes. It's unfortunate.
But we're supposed to use it within 1 year. So
Correct.
are we supposed to use it on expenses from the time that I received it in December till this coming next December? Or should I use it towards the expenses I incurred in 2021?
So you could do both. So DCYF is allowing you to go back 1 year back and 1 year forward. So
Okay.
January 1st, 2021 to December 31st, 2021, whatever expense you incurred, you can reimburse yourself as long as you have the appropriate receipts. And if you haven't incurred any expenses, then you have 1 year from the time you received your grant to spend it.
Now, what if I do all my utilities online, and a lot of things like Puget Power and a lot of things, they don't send me a bill in the mail. I just go onto their website, pay them out, and then I print my receipt.
You have a statement online.
Pardon me?
You have a statement online.
Yes, I do.
Yeah, so that's your statement. It's electronic.
Yeah, so
Okay.
you can print it out.
Well, some of them, actually, this last time when I paid my Puget Power, they don't have that option. Everywhere, trying to find it, they've changed their layout, and I can't find it anywhere. But anyway, so that's going to be kind of tricky.
Yeah.
So if you need help finding those things, we can always assign a TA to guide you through it. But then also call them as well. Try to get that from try to have them send it to you, because they can send you all of that printed.
Maybe the amount that I paid.
Yeah. So let's move on
Yeah,
to
but
the next
Iftin, I want to
question.
say,
We use the whole amount of money for sub IRA business.
Iftin, before you answer the question, I want to remind people, if you want to go back 1 year, your business must have been losing money, like you're using your savings. If you were making a profit, it's not a good practice to go back. Just move forward, right, Iftin? I want to make sure people hear that.
Yes.
Okay.
As an FFN provider, can I use grant money as a copay from parent? Yes. Yes, you can. And I'm reading questions from the chat box, you guys. Another Zelle question. Avoid Zelle as much as you can, people. I think Jessica already asked these questions. Sherry, also I want to know about the $9,000 amount that we have to pay either to our staff ourselves. Can we pay only for ourselves and raise our staff paychecks? 2. Sherry, if you're asking, can you unmute yourself and ask that question again, please?
Hi, thank you so much. I wanted to ask you that I know that the 9,000 amount has to go through the paycheck to the staff. I was thinking either if it just, I heard so many times that owner or provider can just try to check the whole amount. So I was planning to divide it to my staff, but I was thinking instead of that, just raise their paycheck, and then most of them goes to my paycheck. I'm just thinking like that, if I can do that.
So if you have a staff, then you have to pay them bonuses, and you can't write a large amount of bonus to yourself. But if you're by yourself and you don't have any other staff, then you could write yourself a check. Now, if you are giving your staff raises, that's excellent. But keep in mind, this money will only last for 1 year, and you will still have to pay that same amount that you gave him a raise for. So if for the workforce amount, it's just better for you to give them a bonus, one-time bonus, and call it a day.
Okay, thank you. And also, is it okay if the parents pay through the Zelle to us?
Oh yeah, you could receive money via Zelle. You just can't send as from a business standpoint.
Okay, thank you.
You're welcome. Tammy said, I had a client leave owing me money. Can I reimburse myself for the lost income? Yes, you can. Make sure you record. If someone, for example, did not pay their copay or they didn't pay their tuition, that's a loss of income. And you're reimbursing the company. So make sure you document that and write yourself a check.
Hi, Iftin. I just had a quick question regarding the Zelle situation. So I know with the Zelle, sometimes they have they send back confirmations or a receipt that says, you sent money to this person, as a confirmation. Would the providers not be able to use that as a proof of payment for their employees?
Can I say something, Iftin?
Go ahead.
Yeah, okay. From an auditor point of view, Zelle is a new system. I think it's a couple of years old right now, okay? It's not catching up with government and how to control Zelle and stuff. When we tell you limit the use of Zelle, we're not telling you it's wrong. We're just telling you if you can find another alternative way of paying somebody, pay. I understand some folks want instant payment, right? Hey, I don't want a check because that check might require that I take it to the bank and deposit and stuff. But keep in mind, you don't have to go to the bank now to deposit a check. You can use a check image on your app and stuff. So the reason why Zelle is not I don't want to say an excellent source of document is that sometimes, you can't tell what you bought. I can put any memo I want. I can pay my mother right now on Zelle, and I can say, pay her for childcare service under the memo. But in reality, I'm paying my mom. I'm not saying people do that, but it's something I control. But on the other hand, if I'm paying somebody a check, I'm gonna write the name of the business. The check has a memo. I'm gonna put it on that check. And that check is gonna deposit. So I just want to make sure people understand we're not telling you don't use Zelle, okay? We're just telling you try to limit Zelle. But whatever you do not pay your employees on Zelle. That's a no-no. Other expenses, you might just have to find a way to prove it that was actually a legitimate expense. I hope I answered that question for Hafsa and for others.
The other thing also keep in mind is no matter how much memo you put into the Zelle section, it will not show up in the transaction.
Yes.
So it will just say Zelle payment to the person's name. Yes. And that's about it. So best practice as a business owner, avoid Zelle as much as you can.
And Cash App.
Even though now the IRS is taxing Zelle. Yeah?
Yes.
Okay. Martha asked, I have accepted PayPal with a note stating for copay for childcare. PayPal is a legitimate payment, yes, because you could pull a receipt.
Yes.
From PayPal.
Yes, you can. But remember, that's the good thing about that is an incoming money to you. The issue is the outgoing money with Zelle.
Yes. Vijay Kumar asked, my work amount is $9,000. Got the grant in December 2021. Can I write a check myself in January 2022 as my salary? Vijay, the workforce amount is not for salary. Keep in mind, it's for bonuses and raises and benefits. If you're paying yourself salary and you put that check If you write a check and you put salary, then you will be in compliant with the workforce amount. So make sure you write things like bonus, recruitment, benefit. Those are the things that you need. And we will send you guys an email after this training that will give you a list of all of the workforce amount, what you can use it for, and so on and so forth. Okay. We don't have a lot more time, but I want to get to everybody's questions in the chat box. I've been in a business for over 30 years. Congratulations, Tammy. And I never had a business account nor a bookkeeper. Will this new way of doing business create a red flag and cause me to get audited by the IRS?
No, I want to say no. Don't be fearful. If 30 years is a fantastic milestone, you don't need a bookkeeper. It's recommended that you have a bookkeeper, and I don't think not having a bookkeeper is a red flag. So no, Tammy, but I'll encourage you to have one.
Yeah. How about Venmo? I don't use Venmo very much, so I don't know much about it. Is it like PayPal and Cash App?
It's so here's right. I use Venmo to reimburse friends and family and stuff. When I am sending a Venmo, I can put a memo for food, but when the person gets it, it's just Venmo or Venmo out, right? So again, same thing as Zelle. Try to avoid those alternative ways of method payments until it's fully compliant with what the government wants you for documentation.
Awesome. I think that's it of all the questions that we got. Did I miss anybody's question? If I did, please come out of the mute and go ahead and ask your question.
Okay, so I wanted to give my staff bonuses. Some of our staff have been with us for years, and others, like, we just hired. Thankfully, we got some new staff. And you said something about equally. The bonuses have to be equal.
Well, okay.
Or can I do it by, because we really wanted to say thank you for COVID, for who stuck with us when we reopened in June of 2020. Up till this time, it seems to have someone who's been with us for 4 weeks get the same amount as someone who's been with us through all of that. We wanted to kind of have levels.
Okay. Sorry, I didn't, and I misused the word equally. Equitably is what I'm looking for. So go ahead. Every business practice has their own way of distributing the bonuses. However you see fit to use the bonuses, go ahead and spread it that way.
Thank you.
You're welcome. And I'm glad you're doing that, Susan. I hope your staff appreciates you for that. Any other questions that I did not get a chance to read? Go ahead, come out of the mute and ask your question.
So when we write our subjects the 9,000
taking the stand.
Oh,
I'm sorry.
Flagstaff, Arizona.
Hello.
Jones, baby, I feel lucky.
Bill, do you have a question?
I do. So my question was, I have more than one question. So I was wondering, instead of wasting too much time here, is it possible for me just to call Dooley and ask him a few questions?
I have a question for you. How many questions do you have? Because I would like folks to benefit the answers.
Well, yeah, it's kind of a little more difficult. So the first question was, as far as the staff, I know that we're supposed to give raises, but instead of doing the raises, I can do a one-time cash bonus for everybody.
Yes.
Yes.
Not cash, but I mean, you know what I mean, write a check?
Yes.
Okay. The other question was, so I received my check I have 2 childcare centers. I received my check in December 2021. Here's my problem. I've been doing business for 27 years, and the property owner just sold the building that I'm in, where both of my daycare centers are. And so I am frantically looking for a place to move, but I don't know if we'll have time before, before I find a place. So I'm not going to have enough time, obviously, if that's the case, to use up these funds. So, and I'm going to have to pay taxes on this. So if I went through January to December of 2021, and went through all expenses, and wrote all those off, plus the taxes I'm going to have to pay for 2021. Can I do all that and then still be able to give the retention for the staff bonuses in 2022?
Yes.
Okay. He mentioned something about not doing it if there's going to be a profit, but I mean, obviously there might be, but I don't really have a choice if 2022 won't be a full year.
Yeah. I think, Jill, you are a special case. So I'm wondering if Zahra is going to put our number on the chat line and do give us a call so we could guide you as best as we can. I think there's an opportunity for you to write off some expenses for 2022. We'll help you create a plan.
That would be great, because I am really, anything I can do to get money now that I can put back into, you know what I mean? I need help.
We're here to help you.
Okay.
For the sake of time, because we do have to stop at 8:00 on the dot, I had someone that was having a question that got cut off. Do you want to ask your questions? Whoever it was, I want to say it was Warinda. Deborah says, I can't unmute myself. The struggle is real.
It's me, yes. Just the last one. So when I write myself a check to 9,000 for this year, does it consider as another income that I need to get, like being taxed on again for this year?
Great question. No, because the entire money that you received was taxed to you in 2021.
Okay.
As long as you're a sole proprietor and you're self-employed and you file a Schedule C and the grant was reported in 2021, whether you pay yourself 9,000 in January or February, you're not going to take that money again and then say, I earned 9,000. So you've already paid taxes in 2021. So no taxes for you for that 9,000.
No one tax. Okay. Thank you. That answered my question.
The last question for the night is from Deborah. Tom Copeland said to pay it all to myself and then claim expense to bring that amount down. Is that true? I have had staff but got COVID grant to pay them.
Okay, so I want to answer that question. So it's about what type of a business are you, right? And since this lecture or presentation is for childcare providers, I know that we have centers here and we have individuals who run from a home. So I'm going to answer this question in two parts. Part one,
a childcare provider.
If you're a childcare provider, the expenses you pay yourself is not deductible because it's considered an owner's withdrawal. You withdraw it from the bank. So at the bottom of Schedule C is what you're going to be taxed and what you're going to pay as self-employment taxes. Whether you take 30,000 or 9,000, you're not going to put it on the Schedule C and say 9,000 bonus pay to the owner. That is not a tax deductible. Okay? So the 44,000 or whatever you got is to the top. The only thing that's deductible is what you paid to your employees and other business expenses. Okay? So put that aside. Now let me answer this question from I think Jill. Jill was the person who had two centers, right? Those centers are 100% run. They're not for residential. Nobody lives there. So what Jill is going to do is she's going to report that 44,000 or 88,000 or whatever she got in 2021 as gross receipts. The expenses did not change, right? Because you have to match the expenses in 2021, right? But guess what? In 2022, she's going to have more expenses than 2022. I'm just as an example, okay? So she paid the 9,000 in 2022. She paid a program expense in 2022. She's going to use those expenses on her 1120, her 1120S, or her 1065 if she has partners in the business. So Tom Coughlin provided a general answer, but that general answer needed to be specified to the specific tax entity that you're in. I hope I clarified, Iftin, and for everybody.
Yes. And we will have more time together, you guys. So next week is the drop-in session. We're not going to have a training on audit. Audit will be the following week. But hopefully we will have one more session just dedicated to a Q&A where you can come and get the rest of your questions answered. We'll be available throughout the year as much as time allows to answer as much questions as you have. Abdul, if you go to the next slide, there is a phone number you guys can call.
Yeah, I am trying to, I'm making my mouse work.
Mohammed shared the phone number. Oh, that's the main number.
Oh.
There's a phone number that Mohammed shared on the chat box. Please write that phone number down and go ahead and give us a call. Register for the next session. You guys have our email as well, so please do send us an email and we'll respond to you as much as we can.
Where's the number?
Here's the number: 206-278-8290.
Thank you.
You are so welcome. All right, everyone. I hope you stay safe and stay healthy. Make sure you mask up and social distance. This virus is not a joke. We wish you the best of luck on the next weeks coming up, and understand that we're in this journey together and you are not alone. Have a wonderful night and enjoy the rest of the evening.